Sorry, can you guys hear me now? Okay, great. Okay, so for your support and resistance levels, they should be at the lowest swing high and swing low respectively. So let's take a look over here. So my resistance would be over here. I could put my resistance here and my support over here. Okay, so now let's pull out some Ichimoku levels. Sorry, Fibonacci levels. So here we have a Fibonacci projection. Okay, I think it would be better if I placed it here. So my rationale for placing it over here instead is because it is a pullback support. So it's a key level because it has one swing high, two swing high, and price has crossed this level. So let me just highlight this level. So if price comes down to this level, it is likely to reverse and bounce off the level. Okay, now let's move on to some more levels. So for retracement, we want to always use these 5 levels so we can see which levels match up. So my first support could be here at the nearest swing low to current price. So in that case, my 50% Fibonacci retracement lines up with this level. Okay. So let me just see if my 61.8% projection, it does line up. So here we have another key level. So this would be our second support and first support. Okay, any questions so far? Okay. So if not, we can move on to our next currency. So next we have the Japanese yen. So there were no key news events for the Japanese yen, and what can we expect from the JPY today? The yen weakened across the board with the Dollar yen rebounding from the 134.50 support level to end the week at 135.20. Look for the yen to continue weakening, with recent Bank of Japan meeting minutes continuing to highlight the divergence of policy between the Bank of Japan and other central banks. For central bank notes, kept all policy settings unchanged at their June meeting, reiterated that rates will stay low for the foreseeable future and won't hesitate to add stimulus if the economy needs it. Next meeting will be on 21st July 2022. And our next 24 hours bias is medium bearish. So now let's take a look at our charts for the dollar yen. Okay, so we can see over here, price is moving in an ascending trend channel. So we have a bullish bias. However, we can see that recent price is moving sideways. And for our support and resistance levels, over here, so our resistance level over here lines up with our 61.8% Fibonacci projection and our 138.2% Fibonacci expansion. So if there's any currency that you guys would like me to go through more in depth, just let me know in the chat and we will do that. Otherwise, I will briefly go through the currency charts. Okay, let me clear up this chart so it's more, it's clearer. Okay, so here's our support and resistance levels. So our support over here, it's a pullback support because we have a swing high, and it cuts price. Price has cut this level a couple of times. Okay, shall we continue? Are there any questions? Okay, no, let's continue. So next we have gold. So for gold, there were no key news events for today. And what can we expect? Very choppy price movements on gold, trading between the 1820 and 1830 price level. The US is likely to join the G7 by imposing a ban on new Russian gold imports. As gold is a major Russian export, such a sanction could cause gold prices to spike up. Look for price to break above the 1830 to 1840 range for more upside. And our next 24 hours bias is medium bullish. So now let's take a look at our gold charts. So over here, you can see I've already analyzed the chart. So for our stop loss and our resistance, it is a key level because it has two swing highs, so multiple swing high, as well as the minus 27.2% Fibonacci extension and 100% Fibonacci projection. So typically, as long as you have two or more Fibonacci levels lining up, this can be considered a confluence area. So what this means is that if price reaches this area, it's likely to bounce off and reverse. Okay, let's move on. So next we have the euro dollar. So for the euro dollar, there were no major news events. And what can we expect? As high inflation and low demand, coupled with growth slowing to a 16-month low, the Eurozone signals the possibility of a stagflation. The euro climbed higher towards the 1.0570 resistance level. Look for a possible retracement back towards the 1.05 level if the DXY recovers or if any news develops from the G7 meeting. Central bank notes. Plans to phase out the APP into the third quarter remained intact by reducing purchases from 40 to 30 in May and then down to 20 in June. They also highlighted risks for the economic outlook, which are tilted to the downside and have recently intensified with geopolitical and virus-related challenges. So they're expected to raise rates by 25 BPS after APP ends in July and 50 basis points in September. Next meeting will be on 21st July 2022, and our next 24 hours bias is mixed to weak bearish. Now let's take a look at our euro-dollar charts. So with price moving in an ascending trend line, as you can see over here, it supports our bullish bias that price will rise from our first support. So our first support is here, and the first support is in line with two swing lows. Whereas our first resistance, which is a key level, over here, it's in line with the 61.8% Fibonacci retrace projection, as well as another 61.8% Fibonacci retracement over here. So because of the Fibonacci levels that line up, as well as the overlap resistance over here, we can say that this level is a key level. So if price bounces up to this level, it's likely to reverse off of it and drop. You can also take note of the second resistance over here that is in line with the swing high. So it's in line with the swing high as well as two Fibonacci levels, the 100% Fibonacci projection and 50% Fibonacci retracement. And for our support, we have it at multiple swing lows over here, as well as in line with a 61.8% Fibonacci projection. The key level to take note of for this chart would be this one over here for our first resistance. Okay, any questions? If not, we can continue. So next we have the Swiss franc. So for the Swiss franc, there were no major news events for today. And what can we expect? The Swiss franc remained in consolidation, with the dollar franc trading at the 0.9568 level. Look for potential downside on the dollar franc below 0.9560 as the franc gains some strength relative to the current weakness in the US. Central bank notes: surprise rate hike by 50 basis points to negative 0.25%, and the next meeting will be on 22nd September 2022. So our next 24 hours bias is weak bearish. Now let's take a look at our charts. So if there's anything you guys want me to go through in detail, feel free to let me know. Because if we went through everything in detail, there wouldn't be enough time. Oops. Okay. So over here, we have our dollar franc chart. So we can see that there is a general downtrend for this chart. So we have a bearish bias that price will drop. So this is also in line with our fundamentals for our next 24 hours bias, which is weak bearish. So over here, we have a key level with our first resistance lining up with two Fibonacci levels. Okay, let's redo this chart together. Okay, so for our first resistance, we'll put it over here. And for our first support, we can put it over here. So our first support is actually a multiple swing low because we have 3 swing lows over here. And then for our second support, we can use Fibonacci levels to find the second level. So I'm going to pull out my Fibonacci retracement. And over here, I can see there is a Fibonacci expansion So for expansion, we like to use either 127.2 or 161.8 Fibonacci levels. So I'm going to pull up my retracement again and try and find a level that lines up with our first resistance over here. Okay, so now I'll pull out some indicators. Let's take a look at RSI. So we can see over here that price is ranging from this level to this level. Even though it's showing a decrease over here. And there's actually a slight increase as well. If you take a look at my crosshair over here, where my cursor is, the trend line is tilted upwards, whereas our price is moving in a decreasing trend line. So there is bullish divergence over here. So we can expect price to rise. And I would perhaps put my second support or stop loss over here. So the reason for this is because I don't want the ratio between my stop loss and take profit to be too similar. So this is my stop loss. So the space in between your take profit and entry should always be larger than the entry and stop loss. Which in this case, if we take a look here, it is. Whereas if I had put my stop loss at our 168 Fibonacci level, it would definitely have exceeded. Okay, let's continue with our fundamentals now. So next we have the pound. Are there any questions so far? Hi Ravello, no worries. Good to see you again. Okay, now let's continue with the pound. So there were no major news events for the pound today. And what can we expect? Despite a series of weaker than expected economic data releases, retail sales was released at negative 4.7% as record level inflation affected consumer spending. The GBP has continued to trade in a tight consolidation. Look for the GBP to break out of the current range with upside potential capped at around 1.2330 and downside potential at 1.22. So our central bank notes rate hike by 25 basis points to 1.25%. Peak inflation revised to more than 10%, adding to the stagflation fears. Possible GDP contraction in 2023. Quantitative tightening plans to be updated at the August meeting on 4th of August 2022. And our next 24 hours bias is mixed to weak bearish. So now let's take a look at our dollar pound charts. Pound dollar, sorry. Let me just open this. Okay, so we can see over here from my analysis that I've done beforehand. So we have some people who've just joined. So if you guys have any requests that you want me to go through in depth, feel free to type it out in the chat and we will do that as soon as possible. Okay, so for our levels, our buy entry, as you can see over here, is a key level because firstly, the level is a overlap support. You can see over here, it overlaps with swing lows and swing highs, swing low. So it's a key level, along with the two Fibonacci levels that align in this area. The 50% Fibonacci retracement and the 61.8% Fibonacci projection. So because these levels line up, it's a key area and we can call it a confluence area. So if price drops to this level, it is likely to reverse off and bounce off and rise to our take profit, which you can see over here it did. So now we have a bullish bias that price will rise to our take profit, which again is a key level because you can see over here it's a pullback resistance. Price has already revisited this level once, and it's also in line with a swing low. It's also a confluence area because it's in line with the 61.8% Fibonacci projection and 78.6% Fibonacci retracement. Okay, and then our second support over here, or stop loss, is at the horizontal swing low. Any questions so far? We can pull out our Ichimoku cloud to see if it supports our bullish bias. So over here we can see price is moving above the Ichimoku cloud, and so it supports our bullish bias. Okay, let's move on. So next we have the Aussie dollar. So there were no major news events for the Aussie dollar, and what can we expect? So following the RBA, Garth Lewis comments with his plan to avoid a recession in Australia, the Aussie dollar rebound to test 0.6940. This upward move was also driven by dollar weakness during the Friday trading session. Further upside on the Aussie dollar could be possible from the USD weakness. However, any upward move could be brief. Look for the Aussie dollar to trade lower as concerns on commodity demands and the global recessionary pressure could weigh on the Aussie dollar. Central bank notes: next meeting will be on 5th July 2022, and the next 24 hours bias is weak to medium bearish. So now let's look at our Aussie dollar. So over here we can see price recently broke through our descending trend line. Let me just close it off so it's clearer to see. Okay, so we can see price recently broke our descending trend line. And so we have a bullish bias that price will continue to rise. So over here we have our first support, first resistance, and second support. Then now we'll take out some levels. So over here we have a Fibonacci projection that lines up with our first resistance, as well as a 50% Fibonacci retracement and a 61.8% Fibonacci projection. So our second support is also at the horizontal swing low, and we can see actually that our first resistance is a key level. So let me highlight this. So if price reverses off of this, if price reaches this level, it's likely to reverse off of it and drop. So now we pull out our indicators. So here I have my Ichimoku cloud. So with price moving below the Ichimoku cloud, it does not support our bullish bias. So I can go ahead and remove that. Let's try our MACD. So you can see MACD does show a bullish momentum. So we can keep this. Okay. Yeah. If there are no questions, we'll continue on with the next currency, which is Kiwi dollar. So for our Kiwi dollar, there were no news events for today. And what can we expect? So the Kiwi dollar climbed towards resistance of 0.6322, driven by a weak USD and the New Zealand on a bank holiday. Look for a potential rebound on the US dollar to lead a retracement in the Kiwi dollar. Central bank notes. Next meeting will be on 13th July 2022, and our next 24 hours bias is weak bearish. So now looking at our Kiwi dollar. So similar to our Aussie dollar, price recently broke out of the descending trend line. So we expect it to rise to our first resistance. And we can also see that our first resistance is a key level because of our 78.6% projection lining up with the 50% retracement. Over here, we also have a 78.6% retracement that lines up with our first support. And our first support is also a pullback support because it lines up with the multiple swing lows over here. And our second support is just the horizontal swing low. And we can see on our MACD, price is moving in a bullish momentum. Okay, let's quickly continue to our next currency, Canadian dollar. So for our Canadian dollar, there were no major news events. And what can we expect? So the Canadian dollar turned away from the 1.30 resistance and broke below 1.29. Look for the Canadian dollar to continue strengthening against the US dollar as oil prices climb from G7 sanctions on Russian oil prices and markets continue to price in a 75 basis points rate hike to come from the Bank of China. Central bank notes include next meeting, which is on 13th July 2022. So our next 24 hours bias is weak to medium bullish. So let's look at our Canadian dollar charts. Okay, let me just clear this chart, then we can analyze it together. Okay, so from our fundamentals, our next 24 hours bias is weak to medium bullish. So let's try and see whether our technicals line up with our fundamentals. So for our first support, I'll place it over here because it is a pullback support. Okay, and then now for our second support, over here. So the reason why I put it here is because of the pullback support, and we can see that price has cut this level multiple times. So this could be a potential key level. Now we take a look at our first resistance. Over here. Okay, so now let's pull out some levels. So here, I think my 38.2% Fibonacci retracement lines up with the first support. I think my 61.8 also lines up with the second support. So I also have a 61.8% Fibonacci projection that lines up with my second support. And I think that is all the Fib levels that we can have. So now let's move on to indicators. So now Ichimoku cloud, price, it's not really telling us much because price is moving within the cloud. So it has the potential to either bounce off the cloud and rise to first resistance, or it could break the cloud and it could drop to second support. So in this case, we'll remove that. Let's try stochastic. So for stochastic, always remember to change it to 21, 5, and 3. Okay, stochastic isn't telling us much either. And MACD is also showing a bearish. So let's try one more. Okay, so RSI shows us a ascending trend line. So we can use RSI. Okay, let's quickly go through our next slides. So we have crude oil. So key news events for crude oil. No major news events for today. And what can we expect? During the G7 summit, a price cap on Russian oil was proposed. This meant to apply a fixed price on Russian gas exports so that the Eurozone would be able to mitigate further energy price increases. Reacting to this, oil prices climbed higher, as the new sanction could lead to a decline in Russian oil production, worsening the current supply constraints. As production uncertainty continues, look for Brent and WTI prices to continue trading higher. And our next 24 hours bias is medium bullish. So for our analysis, would you guys rather I look at Brent or WTI? For crude oil analysis. Okay, I have some people saying WTI, so we will take a look at that. So let me clear my analysis. So we can see over here, price has broken the descending channel. Okay, so price has broken the descending channel. So we have a bullish bias that price will continue to increase. So this is also in line with our fundamentals that for the next 24 hours, which is medium bullish. So let's quickly plot our resistance and supply levels. So I think this would be my entry. So my support is in line with two swing highs, and my resistance is in line with the pullback support over here, and my second support is in line with the second swing low. Okay, so now let's pull out some levels. So already I can see my 61.8% line up with my first support. So I will use that. And now pull out my projection levels. So remember, for projection, we use these 3 levels, and I can see my 78.6 lines up nicely with my first resistance area. So I'm going to highlight this. So if price rises to this area, it's likely to reverse off of it. Oh, sorry about that. Okay. Now let's pull out some indicators. So price is still moving below our Ichimoku cloud. So I'll remove that. On a MACD, it is showing a bullish momentum. So I can keep my MACD. Let's see RSI. RSI isn't really telling us much. Stochastic. Stochastic isn't telling us much either. So we can just keep our MACD over here. Okay. So thank you so much for staying throughout this webinar. I hope you found this useful and equipping you with the knowledge for your trades for the week ahead. So if there's any last minute questions, we have about 2 minutes left. You can go ahead and type them out in the chat. Otherwise, you guys can leave the webinar and I'll see you guys next week. Thanks, Philip. Bye. Are there any other questions you'd like to ask? Okay, if not, thank you guys so much for joining me today, and I'll see you guys next week.